This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping on April the 1st, 2016. No fooling. Our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. Don't forget, if you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com, streaming 24/7 for your listening pleasure. We have a podcast through iTunes. Type in The World Financial Report on Radio. You can also find us on YouTube and Tuned In. So we are everywhere, our radio show for your listening pleasure. And what a week it was. Our featured diamond of the week is a .52 carat emerald cut fancy intense pink argyle. An absolutely stunning diamond. See it at rarecoloreddiamonds.com. Featured diamond of the week. Connect with Harold at 1-800-432-1022. Our featured diamond, a .52 carat emerald cut fancy intense pink argyle. And the news that came out this week regarding diamonds, we will talk about it in the second half of the show. A pink diamond appreciated up to 500% in under 10 years. The largest blue diamond ever to go on auction was announced just yesterday. They think it could go for $45 million. And then, of course, over the past couple of weeks, we've had the blue Millennium Diamond. They've spoken about that selling, and the Shirley Temple Diamond, both going for possibly anywhere up to $35 million. There was another pink diamond that sold as well. We'll talk about that in the second half of the show. But a pink diamond, up to 500% in appreciation in under 10 years. Stand by for that in the second half of the show. It was the best first quarter for gold in 30 years, up 15%. First quarter for stocks, it was incredibly volatile, down 10%, up 10%, basically flat. The unemployment numbers coming out in the United States, 215,000 new jobs. Of course, no one really believes that job numbers down in the United States. Their unemployment rate went to 5%. 93,482,000 people out of the labor force. That is roughly 40%. And Janet Yellen, the Federal Reserve head, she spoke during the week and was very, very dovish. And that's why we saw gold pop up a little bit. We saw the U.S. dollar go down. Stock markets went up. Canadian dollar did fairly well, although it's pulling back today. But the Fed continues to be very, very dovish. And Harold, what an amazing week it was.
You better believe it, Randy. But for most people, confusing. They don't understand really what's going on. You know, at the beginning of the year, gold was down to 1,050. And then it actually hit a high of 1,260. So we saw, you know, about a 20% increase in the price of gold in the first quarter of the year. Now, as we're taping the show, gold is down $20 today. So we did hit a high of around 1,260, almost 1,270. We're now down to 1,212 as we're taping the show right now. However, the market did hit this morning 1,208.10. There is minor support in the market at 1,207. So what we would need to see is two closes below 1,207, and that would tell me that the next level for gold is going to be at around 1,180. And I'm pretty sure we're going to hit those numbers. Silver is down about 50 cents right now. In actual fact, silver has been extremely volatile. We had a high this morning of 15.52 and a low of 14.77. So we've actually seen about an 80-cent drop from the high in the price of gold, in the price of silver today. Platinum's down $18. Palladium's down $2. The oil market is falling substantially. The oil market is down $1.40 at 36.95. The U.S. dollar has just gone positive, up 34 points on the day, and the Canadian dollar is down 111 points. So, you know, I've had a lot of calls over the last couple of weeks, people thinking that maybe the gold was going to rally and wondering if we were changing our stance on gold, the currency markets, and oil. And absolutely not at this particular point. The fact is is that the only reason that the U.S. dollar fell to a 5.5 month low was because the Federal Reserve, who said that they were going to raise interest rates 4 times this year, hasn't done it yet. It was supposed to happen a couple of weeks ago. It didn't happen. So in disappointment, the U.S. dollar sold off, which is why gold rallied. However, at this particular point, we're starting to see and I'm predicting very strongly that the U.S. dollar is going to be the strongest currency, sometime this year. As soon as the Fed starts to raise interest rates, which they have to do, we will see the U.S. dollar break par. And again, our ultimate price on the U.S. dollar is 108 to 110. If the U.S. dollar hits 108 to 110, that'll push gold down to around $1,000. Now, we've been saying $1,000 gold for a long time. We did hit very close to that, 1,050, and most people would say at that point there that that was an accurate call, and we should be looking possibly at changing our views as far as the direction of gold goes. Again, until the U.S. dollar starts to fall substantially, and I just don't see that happening over the short term, I see that our predictions are going to remain strong. I see gold going to 1,000. I see silver going to around 1150. It's at $15 right now. We also see the oil market going down substantially. Now, I know we were very bearish on oil. We thought that oil would drop to around the in actual fact, we thought that the oil market was going to drop down to around $25, $26. It hit $28, and then it started to rally because you had speculators coming into the market, trading the futures market and the options market because the price was so cheap. They thought that Saudi Arabia and other OPEC members were going to cut production, so they thought it was a good short-term play. Whereas there's a huge glut of oil on the market. And when there's a huge glut of oil on the market, there's no way that oil is going to go higher. You had short-term speculation in the market, but still a huge glut of oil. That tells me that oil is going back down again. And in actual fact, we think that that oil is not only going to break below 30, we believe it's going to drop down to around $24 to $25 because at this point in Saudi Arabia and in the Middle East, there is oil being sold at around that price. So again, if that's where it's being sold in the open market, I anticipate that the price of oil is going to fall that low. Now, if crude oil does fall to around $24, $25, anticipate that the price of the Canadian dollar is going to break down substantially because there's a direct tie into oil, commodities, and the Canadian dollar, just that there's a tie-in between the U.S. dollar and gold. When the U.S. dollar is very strong, gold is a weak commodity, and when the U.S. dollar is weak, gold is going to rally. We saw that very strongly over the last few weeks. But again, we're not looking at an ultimate short-term situation. We feel that sometime this year, we're going to see a bottom in oil, probably in the Canadian dollar, and probably in gold. On the other end of it, we do believe that the U.S. dollar is going to be the strongest currency, which is why we believe that gold is going to drop to that level. So, again, as we're taping the show today, the market is falling into line. The Canadian dollar is down a full penny, trading at 131. Got the crude oil market down $1.36 on the day, and you've got the gold market basically down $20 at this point. So, again, Randy, as we're looking right now, I just don't see any changes to our recommendations. The fact is that the markets are very, very difficult to trade. Most people that are trading stocks are losing all their money. Most people don't know how to trade the commodity markets, and they're leveraged in most cases. So if you don't know what you're doing and leverage can work for you and against you, stay away from those markets. If you don't know how to trade commodities, especially futures, you could lose all your money. In fact, 90% of the people that trade in the futures market lose. Those are not good odds. And again, I get a lot of people that call me and ask for advice on short-term trades, and I certainly don't mind giving it. But the fact is that if you don't know what you're doing trading these markets, the chances are is that you're going to lose, and the leverage in these markets can be so severe that you can actually lose more money than you put up. Personally, I don't trade in the markets that way, and I never recommend my clients trade that way. Now, I do have some clients that are very aggressive traders and have made fortunes with us over the last few years because they leveraged our recommendations and made a lot of money shorting gold, shorting the Canadian, shorting oil, and going long the U.S. dollar. However, that is not something that I recommend for most, and I don't do that myself. I'm a very conservative person. Even though I trade the riskiest markets in the world, personally, I don't take a risky view and a risky stance to those markets. And again, I do not want my clients to trade in those markets, especially if they don't know what they're doing. So all in all, we feel that the risk in the marketplace is extremely high. And what you really have to look at when you're investing in these type of markets is, number one, protecting your capital. It's called capital preservation. And with interest rates at 1% and stock markets around the world very volatile, and the commodity markets as risky and volatile as they are, the fact is that you want to basically stay in safer investments. And again, because the returns right now in stocks and in commodities are not good, and putting your money in the bank at 1%, you're actually losing money when you take into consideration inflation and paying taxes on it. The fact is that number one is to preserve your capital. Number two is to look for an investment that you could possibly grow your investment and make some money. With my company, even though we do trade and make recommendations in commodities and stocks and different investments like that, most of the investments that we invest in are actually fairly safe and very conservative. Now, purchasing diamonds as an example, there are certain diamonds that will go up 15, 20% in a year. That's way more than you're going to get in stocks or in S&Ps. And then on top of that, we have private investments that deal in mining of diamonds that my company allows our Canadian clients to invest with us. And many of our clients are making over 25% a year. I know that sounds like a ridiculous return, especially in these times, but the fact is that these are private investments that my company and I have made over the years. In fact, this is a 100-year-old business that my partner's family has been in for over 100 years, and what I did is modernized it and allowed my Canadian clients to invest with us, and again, we're doing tremendously well. So if you'd like more information on how we're making money in these crazy markets, the information is free. The phone call is free. I'll sit down and explain everything to you. If it's something that you want to participate, we'd love to have you on board. If it's something that you don't want to do, there's no problem whatsoever. But again, in these days and times when putting your money in the bank at 1% and losing all your money in the stock market, and that's obvious for those that have money in retirement savings plans. Nobody's made any money in over a decade, and you won't. The worse the markets get, the worse your retirement plans are going to be. Basically, my clients are doing much better than most. So if you want further information on that, give me a call. Very, very strong recommendations. Gold's down $21 right now. Silver's down 50 cents. The oil market is down. The Canadian dollar is down. And the U.S. dollar is up. And those are exactly the recommendations that we've been making to our clients.
Grab a pen and paper. Mark this number down, 1-800-432-1022. Now, if you didn't have time to grab a pen and paper, don't worry. We will mention that number again. That is your number to connect with Harold Siegel, 1-800-432-1022. The call is free. The information and what is discussed between the two of you is 100% confidential. Harold's website, rarecoloreddiamonds.com. It's rarecoloreddiamonds.com. Our featured diamond of the week is a .52 carat emerald cut fancy intense pink argyle. In the second half of the show, we're going to talk about pink diamonds and the opportunities available to investors. There was a story that came out this week. We'll talk about it more in the second half of the show. A pink diamond appreciated 500% in under 10 years. Also, a blue diamond, the world's biggest blue diamond, will go up for auction. Those stories and more coming up in the second half of our radio show. One of the things that we definitely need to keep an eye on, and that is the Fed in the United States. And Janet Yellen did speak. She said, caution in raising rates is especially warranted. The Federal Reserve Chair Janet Yellen says it's appropriate for U.S. central bankers to proceed cautiously in raising interest rates because the global economy presents heightened risks. The speech to the Economic Club of New York made a strong case for running the economy hot to pushing away from the zero boundary for the Federal Open Market Committee's target rate. I consider it appropriate for the committee to proceed cautiously in adjusting policy, Yellen said. This caution is especially warranted because with the federal funds rate so low, the FOMC's ability to use conventional monetary policy to respond to economic disturbances is asymmetric. Fed officials left their benchmark lending rate unchanged at 0.25% to 0.5%, while revising down their median estimate for the number of rate increases that will be warranted this year to 2 hikes from 4. Now, remember, at the end of last year, they had talked about raising interest rates in the United States 4 times in 2016. Now they're saying possibly 2 times. Here in Canada, obviously, we were at 1%, and our rate has gone down to 0.5%. 2 rate cuts by the Bank of Canada. Now, in the short term, obviously, Janet Yellen has stopped the strong dollar rally, but as Harold was saying, that does not mean in the long term the U.S. dollar will not appreciate, because more than likely, if they start raising rates and other countries don't, you're going to see the U.S. dollar appreciate very, very quickly, especially in a world with negative interest rates. Get our free weekly newsletter. Get it from Harold at rarecoloreddiamonds.com or call 1-800-432-1022. In our free weekly newsletter, we send out via email free of charge every week. We have stories about negative interest rates. Negative interest rates put the global economy on a razor's edge. And they also go on to say Japan's negative rates, a looming headache for the central banks, not just in Japan, but all around the world. Mohammed Al-Arian, 3 long-term consequences of negative rates. And one thing you should definitely check out in our free weekly newsletter, we have a story about, and this is rather sad, Japan's elderly are turning to crime to ease the cost of living because they are struggling financially, having a hard time getting by, and they are turning to crime. And that's something that is tragic when you hear that news. One of the other stories I think is worth repeating, Harold. You can see how the world is changing. One day we're all driving taxis, and then one day suddenly there's Uber. And they call it the Uber moment. The Uber moment is coming for the banking industry. More than 1 million people could lose their jobs. Banks are quickly approaching their automation tipping point, and they could soon reduce headcount by as much as 30%. That according to a new Citi GPS report on how financial technology is disrupting banks. Banks, Uber moment, will mean a change of bank branches rather than the banks themselves. Specifically, it will mean the shift to mobile distribution being the main channel of interaction between customers and the bank. That means there will be less need for bank branches and the people who work inside them. We believe there will be another negative minus 30% reduction in staff during 2015 to 2025. The report said, bank staffing levels are already down significantly from their pre-financial crisis peak. The number of bank tellers in the United States down 15% from its 2007 peak. The Citi analysts predict a 40 to 50% staff reduction from pre-crisis highs. The job cut Citi is describing would add up to more than 1.8 million jobs from current levels in the banking sector in the United States, Canada, and Europe over the next 10 years. Harold, we have about 3 minutes left in our segment, but this is what we're seeing around the world. You have the taxi industry being affected by Uber, a situation where if you're in the hotel industry, you're very, very concerned about Airbnb. You have these disruptive companies coming along, and you can see a lot of people are going to be losing their jobs as a result.
That's frightening to think about it. And when you look at the banking industry in general, it really never recovered from 2008 and 2009. So the fact is that if interest rates are at 0 or at 1, how are the banks making any money? And then, with negative interest rates coming, and I get this question a lot, the fact is that nobody's going to keep more than what they need to in the bank. Because the fact is you're going to be paying the banks to keep your money, which is ludicrous. So, yes, there's going to be major changes, and some of them are going to be shocking. But when you sit down and think about the hundreds of thousands of people from the banking industry that are going to be let go, that's very concerning for the overall economy of the United States and of Canada, because, again, all these banking models are all tied into each other. So what happens in Europe and what happened in Cyprus, and we've said this before, what happened in Cyprus a couple of years ago was just a test to see how the world was going to react when the banks start stealing our money. And that's exactly what happened in Cyprus. It's happened in England. Nothing major happened. There was no rioting or anything like that, so people are accepting it. And that's a horrible thing because, again, we've got to be smart. There's no way in the world that you leave more than the insured value in your bank account unless you're a gambler that, could wake up one morning and find that if the insurance on your bank account is $100,000 and you've got $500,000 in there, you've lost $400,000 with no chance of getting that money back. It makes no sense to me to take that type of risk.
And that was one of the things we talked on the last show. Here in Canada, because of the Canadian budget, we are now officially a bail-in nation when it comes to the banking industry. If the banks have problems, we go the bail-in route. That means the government will not be rescuing us, except for the obviously the cash deposit that they have promised, the $100,000. But beyond that, anything beyond that, we're on our own, and we could definitely lose that money, as was the case in Cyprus. So Canada, because of the budget that was just released, bail-in nation. Our featured diamond of the week, and you can take a look at it at rarecoloreddiamonds.com, is a .52 carat emerald cut fancy intense pink argyle. And this is why we advocate hard assets in the times that we live in, not only financially. You have the bail-ins, the negative interest rates, cashless society, volatility in stock markets. We advocate hard assets, diamonds, gold, and silver. Take a look at our featured diamond of the week at rarecoloreddiamonds.com. Featured diamond, a .52 carat emerald cut, fancy, intense pink argyle. And don't forget, ask Harold about receiving our free weekly newsletter. The World Financial Report on Radio is the companion to our radio show, and it keeps you up to date on what's happened during the week. You can go through all the material and be completely up to date in 5 to 10 minutes, or spend hours if you want. You'll see all the articles that we're talking about on our radio program. 1-800-432-1022, 1-800-432-1022 to speak with Harold about investing in hard assets. Get our free weekly newsletter. The website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. We're going to come back and talk about a pink diamond that appreciated up to 500% in under 10 years. And this is a story you don't want to miss. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show, No Fooling, on April the 1st, 2016. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Our radio show runs Sunday afternoon at 3 on 630 CHED. Ever miss a show? They're archived on Harold's 2 websites, streaming live 24/7 for you and your listening convenience. HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. We're on TuneIn and on YouTube as well. We're everywhere for you to listen to our radio program. Our featured diamond of the week from rarecoloreddiamonds.com, a .52 carat emerald cut fancy intense pink argyle. And this is an absolutely beautiful diamond. See it at rarecoloreddiamonds.com, featured diamond of the week. And we have some top stories. We'll get to Harold's commentary momentarily, but we want to touch on our big story first. A Florida couple's 10-carat pink diamond appreciated up to 500% in under a decade. Christie's will auction for $8 to $12 million a pink diamond ring that has appreciated up to 500% in less than a decade since being purchased by a South Florida man for his wife. The 10.07 carat cushion modified brilliant cut fancy intense purple pink diamond flanked on either side by a triangular shaped diamond will be offered at the auctioneer's magnificent jewel sale in New York in April. The appreciation from the $2 million purchase price in 2007 comes amid an increase in the value of pink diamonds. The supply is forecast to run out and demand has spiked, according to the diamond's appraiser. There's only one colored diamond for every 10,000 colorless diamonds, according to Andrew Kravitz, founder and president of Kravitz Estate Appraisals. In a statement made March 24th, most of the world's pink diamonds come from the Argyle mine in Western Australia. The supply is expected to run out by 2020. High demand from wealthy individuals and savvy investors around the world is driving the steep increase in values. Kravitz said that he was asked to appraise the couple's jewelry collection for insurance purposes last fall and discovered the diamond ring was undervalued. When I looked through a list of their personal assets on their insurance policy, I saw some pieces were overvalued, others were undervalued, and a few right on the money. But there was one glaring mistake. A 10-carat pink diamond had been appraised for only $4.7 million. Kravitz called an associate specializing in colored diamonds who confirmed the piece would fetch more than $8 million in the current market. Pink diamonds in strongly saturated colors of over a carat are a rarity, according to Raul Katika, international head of jewelry at Christie's. To locate an intense pink gem of over 10 carats is a real event in the world of jewelry auctions. And the magnificent jewel auction is coming up on April 20th, and it will also feature a 15.99 carat Jubilee ruby, estimated price $12 to $15 million. Now we'll talk more about a blue diamond, but Harold, we want your thoughts on 500% appreciation in under a decade. You've spoken about it. I'm sure some people have been skeptical. We've been talking about this since 2005, but here it is, a story verifying what we've been saying for quite some time.
You bet. And there's a lot of stories like that. When you see what happens at auction, you don't always know what the people paid for that diamond. But the fact is that, somebody who bought pink diamonds 10, 15, 20 years ago, they were not overly expensive. In fact, most people didn't even know what pink diamonds were. So in this particular case, let's look at why this gem is so amazing and why it's going to sell for such a large amount of money. First of all, the sheer size of it. It's over 10 carats. The fact is that when you look at most pink diamonds are small diamonds. This is a huge diamond. A 10 carat is about the size of your thumbnail. So, not that that looks huge, but for a diamond that is huge. So this is a 10.07. It's a cushion cut. A cushion cut is a very popular cut with rounded sides to it, and it actually looks bigger because it's got the rounded sides. So it's got a beautiful cut. It's a modified brilliant, so it really sparkles. And then you've got the color of it. It's a fancy, intense purple pink. Now, let's look at that, for example. There's all these different colors of pink. There's faint pink, there's very light pink, there's light pink, there's fancy light, there's fancy pink, there's fancy intense pink, which this one is, it's a purple pink, and then there's fancy deep and fancy vivid. So on the top scale, this is right there. The color is amazing on this diamond. But then when you look at most diamonds that have pink and purple in it, you're going to look that it would be a purplish pink because, pink being the more dominant color in most cases, this is not the case with this particular diamond. This diamond is equally purple and equally pink. So it's not a purplish pink, it's a purple pink. And it's over 10 carats, and it's the fancy intense, and it's a cushion cut. So, yes, this diamond is extremely valuable and will do nothing but go up in value. And what a phenomenal investment it turned out to be from paying about $2 million for the diamond in 2007, and now just basically 8 or 9 years later to realize $8 to $12 million back on this is what we've been talking about all this time. Now, not all pink diamonds are going to appreciate that much. A lot of it has to do, again, with the size and the color and the clarity and everything like that. They don't go on to say what the clarity of this diamond is, but I'm certain that, it is a good clarity on this diamond. When you look at Argyle, 95% of their diamonds are very small. They're under a quarter carat. This is over 10 carats. This is not an Argyle pink. This diamond would have come from a mine more than likely either in India, in Africa, or in South America. So the fact is that Argyle pinks come from the Argyle mine in Western Australia. It's the most famous mine in the world for pink diamonds because they produce 95% of all the pink diamonds in the world. The fact is that the mine has been in operation since 1986, producing 30 million carats of diamonds a year. 30 million carats of diamonds that are mostly white diamonds, industrial white diamonds, meaning that they're not even white diamonds that you would put into a ring for the jewelry trade. Industrial white diamonds are actually used in diamond bits and drill bits that are used to cut other diamonds. So the only diamonds of tremendous value that come out of the Argyle mine is a very small amount of pink diamonds, the odd blue, the odd yellow, but the Argyle mine is famous for their pink diamonds. And the fact is that the Argyle mine produces 95% of the world's pink diamonds, but 95% of the diamonds that they produce are extremely small. They're under a quarter carat. They're actually known as the most concentrated form of wealth on Earth. How could something that's a quarter of a carat, if you look at your baby fingernail, that's approximately a carat. So if you look at a quarter of that size, you could be looking at a vivid, which is the highest saturated color in pink diamonds and blues and that type of thing. You could see that a quarter carat vivid pink diamond could be worth a small fortune. It's worth an awful lot of money, even though the diamond is small. In actual fact, one of the biggest diamonds ever to come out of the Argyle mine was only 2 carats. So you're not talking about the type of diamonds that we're talking in the article that Randy just mentioned, that the Florida couple's going to get a 500% return on a 10-carat pink. The fact is that we could see similar type of returns over the next 5 to 10 years on very high-grade pink diamonds from the Argyle mine. And the fact that the Argyle mine is going to close within 4 to 5 years means that there won't be any more pink diamonds of any consequence whatsoever. So we've been recommending to our clients to purchase Argyle pink diamonds and put them away for their future. The fact is that some of them will increase, 10, 20, 50%. Some will increase 100, 200, 500%. Some will actually return more than that, depending on the size, the color, the clarity, and everything, to do with the diamond. But all in all, we see that the Argyle pink diamonds as one of the strongest investments that we could make over the next 5 to 10 years. Now, even though the Argyle mine is going to close in 4 years by 2020, and the reason that it's closing is that it's just not producing anymore. In actual fact, the mine is on its last legs, and we're noticing by the quality of the pinks that are coming out of the mine, a lot of brown is seeping into the mine now. So instead of getting these beautiful purplish pinks or purple pinks or straight out pinks, you're getting brownish pinks, and they're nowhere near as beautiful. So the fact is that we only have a short period of time until the Argyle mine closes. Give it 2 or 3 years for all the diamonds to run out, and we think that our clients that have invested in Argyle pink diamonds are going to score very big on these. I think it'll be one of the better returns that we've ever made on an investment. And again, I highly doubt that this will ever happen again because there is no mine in existence that I know of that produces 95% of any particular colored diamond. Now, the fact is that out of every 100,000 diamonds, carats of diamonds that are mined, only 1 diamond will be colored. And even though a diamond is colored, it does not mean it's an investment quality diamond. In fact, most diamonds are not investment quality. In fact, most yellow diamonds are not investment quality. If you own a 1 carat yellow, fancy intense yellow, fancy vivid yellow, flawless diamond, you have a diamond that will increase in value. But if you own a yellow diamond that's a carat, that's an SI1 or an SI2 of medium color type of thing, you're not going to make any real money on that. Those diamonds are plentiful. What are in high demand and very few of are the internally flawless diamonds, and those are the type of diamonds that we bring to our clients. In the case of a fancy yellow or a fancy intense yellow flawless diamond, those diamonds tend to increase by about 15 to 20% a year. If you look at other investments out there, there's really nothing that compares to an investment quality diamond, except for the fact that you have to hold on to this diamond for a longer period of time, because it's not like a stock or a commodity that trades on an exchange that you could buy it one day and sell it the next. Diamonds aren't like that. Diamonds are portable private wealth. Diamonds could be sold in other currencies. Diamonds is an asset that you could cross a border with if you were going to move to another country and start all over again. That's not possible with cash, stocks, anything like that. In actual fact, the most people that leave the United States, for another country have to give off their passports. So the fact is there are societies out there, sovereign society and organizations like that totally believe in portable private assets like diamonds, and art and those type of things. But the fact is diamonds, a 10-carat diamond like the one that we've talked about in this show that's going to sell for about a 500% return over 10 years is only the size of your thumbnail. That could fit in the pocket of your jeans or in your socks or anything like that. You're talking about portable private wealth, and when we talked earlier in the show about the two most important factors of an investment, number one is capital preservation, going into an investment that's going to be steady and not lose your money for you. That's the most important thing to me, is not losing our money. Number two is making money, capital appreciation, and that will come with the right investment and the right amount of time. So basically right now, the most important thing is putting your money into investments that are not going to lose your money for you, and in most cases, that's an investment quality diamond. A yellow flawless, a beautiful blue, a beautiful pink, and we're now mining the most beautiful green and orange diamonds that will take off and run just like blues did. Some blue diamonds 10, 15 years ago were $200,000 a carat, the vivid blue flawlesses. Now those same diamonds are selling for $2 to $4 million a carat, depending on the color and depending on the size of it. So again, we're just ecstatic about what's happening in the diamond market. Now, we also have private investments where my company invests in mining. We mine some of the most amazing diamonds. We have a program where we mine white diamonds for the jewelry trade, and our clients are cutters and polishers. Those type of investments, and our Canadian clients can invest with us in these deals, our clients are making 25% on those. So the fact is that if you're not doing well, if you're not making money in the markets, if you're afraid of the stock market, and obviously 1% in putting your money in the bank is not going to do it for you, give me a call. I'll explain how we make money in the rough diamond market. It's going extremely well, and the prospects for the future are tremendous. So again, we go outside the box. We're not like most investment firms that deal in stocks and bonds and those type of investments. In real estate, we don't do that. The fact is we deal in alternative investments. Alternative investments are investments that are not paper-related, like stocks and bonds. If you look back at some of the biggest returns on investments, they've been in alternative investments, not in stocks and real estate. In actual fact, when you look at classic cars, they're skyrocketing in price. I just saw a show the other day where a classic Ferrari sold for over $50 million. And again, it's going to go on sale again, and it's going to go up further from there. Again, a diamond in a 10-carat intense purple pink has gone up 500% in 10 years. There's no investments out there that are not alternative assets that make these type of returns. That's why we're saying diversification is extremely important, and to get something into a diamond for your future and for your kids' future. I put away diamonds for my grandchildren. Love my grandchildren more than anything in the world, and again, I don't buy them stocks, I don't give them cash, I don't buy them bonds. I put away diamonds for my kids' future. In 20, 30 years from now, when they're ready to make their mark on the world, they're going to have an asset that we could sell for them, that they'll start off with something substantial. But I can assure you that stocks can go to zero, but diamonds never will, nor will gold. So, again, I'm very, very excited about what's happening in the diamond market, Randy. A lot of our clients are involved in pink and blue diamonds, and now we're getting heavily into orange and green diamonds, some of the rarest diamonds in the world, and we're anticipating returns similar to pinks and blues that we're going to get in our oranges and greens. So if you're interested in making money in the diamond market, please give me a call. If you're interested in making 25% or more on your investment, give me a call and I'll explain all about our mining business to you.
1-800-432-1022. 1-800-432-1022. The call is free and confidential. Anything that is said between you and Harold, 100% confidential. The call is free, 1-800-432-1022. Harold's website, rarecoloreddiamonds.com. The featured diamond of the week is a 0.5 2-carat emerald cut fancy intense pink argyle. We had our first story from our newsletter. Florida couple's 10-carat pink diamond appreciates up to 500% in under a decade. Now our second story. They recently sold Petra Diamonds, a 32-carat pink diamond, for £10.7 million. That's $15 million in U.S. funds. And the Jersey-based diamond mining company announced it recently recovered the 32-carat diamond from the Williamson mine in Tanzania. Now, it's interesting to note each of the diamonds, 32.33 carats, is worth a remarkable, and this is in U.S. dollars now, $463,965, and in British pounds, 328,807. Now, Petra is going to have a stake in this diamond. They've kept a 10% stake because it will be polished and obviously shined up beautifully for sale at some point, and they'll get a 10% stake when it's sold at auction. Now our big story of the week. The largest blue diamond ever goes to auction for $45 million. I was going to mention in the past, on the shows we've had over the past couple of weeks, we had a story about the Millennium Blue Diamond. We had a story about the diamond, and what an amazing story behind the Shirley Temple Blue Diamond. Both of those coming up for auction. Now we have the largest fancy, vivid blue diamond offered at auction, set to go up May 18, Christie's in Geneva. The 14.62 carat stone, the Oppenheimer Blue, is named after its previous owner, Sir Philip Oppenheimer, whose family controlled De Beers for 80 years before selling its 40% stake to Anglo-American plc for $5.1 billion in 2012. The diamond, whose fancy vivid designation rates it the highest and clearest saturation, and this is for the color blue possible, is estimated to sell for $38 million to $45 million. The last decade, obviously, we've had a string of blockbuster prices. Now, Harold, when you add in what's going to be happening with the Millennium, you have the Shirley Temple Blue Diamond, now the Oppenheimer Blue potentially going for $45 million. It is such an exciting time for colored diamonds at auction, and people are really seeing, who have invested in this market and are considering investing, the potential of price appreciation that can be had over time.
You better believe it, Randy. Those are real returns. And again, just understand that people don't invest $45, $50 million into a diamond if they think they're going to lose money. That's extremely important. You know, the fact is we get enamored with these gigantic prices, $45, $50 million, $20 million, all that type of thing. But the fact is that there are diamonds that are nowhere near those prices, that are in the $50,000, $100,000, $200,000 range, that have tremendous appreciation also. You know, the fact is that if you make 500% return on your money, it doesn't matter what the amount of money is. If you've only got $100,000 and that's what you've invested, and you've made $500,000, that's a 500% return. It's an amazing return. So some people can invest millions, some people can invest, 10,000 type of thing, but the return is still the return. And believe me, somebody who is not a multimillionaire that makes, 100% or 200% return on their investment are ecstatic, because you cannot make that kind of money today unless you're in a unique situation. So again, I'm very proud and very pleased about what's happening in the diamond market. On the other hand, look at what's happening in commodities that trade on exchanges. Since we've been taping the show, silver has now dropped 60 cents. It's now down below $15 at $14.85. Gold's down $22 on the day. That doesn't happen in diamonds. You don't get those swings. The only thing about colored diamonds that are investment quality is that over time they go up in value. And again, one thing I do want to caution you is that you don't buy a diamond and look to sell it over a short period of time. You know, the fact is that you've got to give it time in order for it to become more rare and for it to go up in value. And it doesn't happen overnight. It's not like buying a short-term investment. It's a longer-term investment. That's why most of my clients that put away diamonds put them away for their retirement. They know they can't rely on their retirement savings plans, but they can rely on a diamond over a next 10, 20, 30-year period. And that's when you're going to see gigantic returns. And for those of us out there that may not need to sell our diamond because we don't need the money to retire, it's the type of thing that you hand down to the kids and grandkids because that's where they're going to make their major wealth from. So, again, I'm just very pleased that this has all come about. We're going to start holding our auctions again this year. We're just waiting for our new technology to finish. We're having our friends from Vancouver, Relentless Technologies, come up and show us our new website and how all the new technology works. Then we're going to have some amazing auctions, not only diamonds, but other things also that are going to be thrilling. Again, for those of you out there that are concerned about your financial future and don't know how you're going to get by because you're not making money on investments, give me a call. My clients are making 25% a year or more on private investments, and I'd like for that to happen for you also. Again, in the meantime, I'm looking at gold's going to more than likely drop to 1,000. I think the silver's going to drop to around $11.50. I think oil's going to come back down into the mid-20 range, around $25, $26. I think the Canadian dollar's going to drop to maybe around 65 cents, and I think the U.S. dollar is going to go to 108, 110. And those are the type of situations that we're looking for this year in the marketplace.
Featured Diamond of the Week from RareColoredDiamonds.com. A 0.52 carat emerald cut fancy intense pink argyle. See it at RareColoredDiamonds.com. Connect with Harold 1-800-432-1022. RareColoredDiamonds.com. Get our free weekly newsletter. And this is a must-read week. We have that story. Florida couple's 10 carat pink diamond appreciates up to 500% in under a decade. We have the story of Petra Diamond selling the pink diamond, and it needs to be cut and polished. Will go for auction at some point for $15 million. We have the story of the largest blue diamond ever to go for auction, $45 million, the Oppenheimer Blue. And don't forget, we've touched on past shows, we have the Millennium Diamond that's coming up for auction and the Shirley Temple Diamond as well. Blue diamonds are going to be definitely something to look forward to in the auctions to come in the months ahead. And it's interesting to note, in 2008, Lawrence Graff, he purchased, and it was a record-breaking $24.3 million for a fancy deep grayish blue diamond at Christie's London. 2 years later, Graff broke another record, paying $45.6 million for a 24.78 carat pink diamond at Sotheby's Geneva. Last year, Hong Kong billionaire Joseph Lau broke the record by paying $48.4 million for a 12-carat fancy blue at Sotheby's Geneva. The night before, he paid $28.5 million for a 16-carat pink diamond at Christie's, totaling together $77 million purchased for his daughter. Harold, when we hear these big numbers, they do go for those large, large sums, and done obviously by people with a vision and some bucks in their pocket. We have about 10 seconds left here.
Big bucks, Randy. I want to wish everybody a wonderful weekend and a very profitable day, and thank you very much for joining us on our weekend radio show.
Thank you, Harold. Connect with Harold. Featured Diamond of the Week, a 0.52 carat emerald cut fancy intense pink argyle. RareColoredDiamonds.com. 1-800-432-1022. Get our free weekly newsletter from Harold. And that's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.